Welcome to Crypto Space Junk. Today I'm going to look at Cardano. We go through the Fibs on all the time frames. So have a look at the monthly. Here we've got the consolidation all the way down to the 20 EMA. Here. See this monthly candle. Each one of these candles is a month. And we're forming an inside bar. No point taking a fib there because obviously we're getting the first candle. Go to the weekly. See, we've come all the way down. Two outside bars at the bottom of the Bollinger Band. An inside bar, which is a hammer. Makes the Holy Grail pattern. That's what that yellow is symbolizing. We're not looking at that. So you see this consolidation coming down. Trend lines outside here. It look like we're going to be bullish. Is we need to get above that. Break through it. So what I'll do, I'm looking at the area where, if I'm looking on the weekly chart, where I think we'll get to. So I'll take the consolidation from the high to the low. I'll get a fib. And I'll measure to the bottom. So after consolidated, on the reverse leg, I'm going to look to see where I think we'll go to. So one of my targets I'll be looking at here, where you can see this hammer or inverted hammer, and we're getting selling pressure around the 618 area there, so around 230 area. What will happen, I can see, is going all the way back up to 618. We might see selling pressure on the weekly chart in this area, where you could look at taking some kind of profits around here, and then you'd probably look for a pullback, which you'd go from the bottom on this and you'd invert it. A good buy would be the previous resistance there at the 618. So you're looking at it's coming down, loading back up in this area, and then be looking go up to another level and test another level here. So we come down to 618. You could set targets at 618 extension, which brings us back in line to the all-time high. Back here, then you possibly look for a pullback onto this level here. You take some profit, and you go for kind of a pullback along here. So when I remove these now, so when I'm talking about the fibs, this is what I'm thinking in my head. I'll try and make it more simple for people. If that asks me, they just don't get what's going on here. So from here, I see it's going up to this level. Let's say we come in and we start pulling back and we start buying there. So we're looking for the next target. And I will measure bottom, top here, look for the rebuy. That's where it comes in at 618. Also, you see here, it lines to the 618 extension as well. You could also, I'll remove this. Take from this level, let's say this is the high. And then you look here, we're around the 50,618 area. See how the fibs continuously line up as we go on. And people set these automatically. So people will set like this. I could set all this up automatically in orders into an exchange now. So that I don't even have to look. I could just leave it automatically. And that's why you'll find when we go off fibs, I'll go back to previous here. I'll go to a shorter time frame. So this works on all time frames, not just the weekly. It can be a daily, hourly, 2-minute chart. The fibs show up all the time. So each one of these candles, what we're on now, is a week. So if I go to a day chart, each candle is a day. Then you can go inside the candle again and again and again. I can go down to the 8-hour, the 4-hour, 2-hour, 1 hour. So this was the previous leg down. It's consolidation all the way down. But it's gone on. So that's the main trend at the moment, going down. So I'll take the opposing leg to find a target here. It's on a daily. I'm going to look in the region of the 618. Now, at the 38%, you can see where the sellers are coming. Now, they've already made profit. They bought down there. They've made 30% profit. So they'll be selling, taking profits, and looking to rebuy cheaper. So what they would probably do here, take a fib from that bottom to the top there, and I'll look at reloading at the 50 probably. That there. They're looking to buy at 109. But they may not. No guarantee the price will come down there. It could continue up, and then we'd have to take the fib elsewhere. They'd probably go down to an 8-hour. Again, I can't really see much happening there. So we start getting sellers. Some weakness. I don't think we'll be coming down from this level. We've got a high wave candle coming in there. I can see us going higher, probably up to the 618. So even though I took the reading on the daily chart, it's still, these are the same candles going from top to bottom, which were in them day candles where I measured. So here, I can still hit at least hitting this 618 before we get a pullback. I feel it looks like that they've tried, but it looks like they're failing. Got a hammer there, you got high wave candles. It's indecisive candles. It could just drop, but I don't think it will. I mean, if I go look, anything there, an outside bar, so it's indecision, showing indecision. Now I'm going to rewind the chart, try and find example how this actually works. Daily. Okay. Market's having it. Try and refresh that page and see if it works. Okay. Okay. So we get this sell off here. This isn't live now. This is previous. What I'm going to do is just take the fib from the top, the high to the low. You can see we hit the low again. So you're thinking where a top target. So that fell pretty quickly. So you could expect a pullback. We know the trend, but we're consolidating downwards. We know we're probably going to go lower, but we're going to come back before we go lower. So potentially you can see them all loading up on this line here. All loading up. So we're going to have a potential to go up from here. So what you would do, you'd load up here. You can see everyone loading up. And you're going to look to take profit. When I play the candle, you'll see what happened. And we'll come up. And this is why the fibs can show you how they actually work. And you see them coming in here. So we're loading up here. Get the next candle. And each one of these candles is 4 hours. We're coming up. See, when we hit this 50, we get weakness. See, it's setting off. So people are taking profits on this 50 that they've aimed. They start to take profits. Now, you could look for another fib here to put some buy orders in. So if just say I missed this leg up, I'll be looking at where I could buy. And it'll be telling me I can buy about 130. If I go off the 618, which I normally do. Still a bit of weakness there. Right, I don't get the opportunity. Buy the pullback there. But we've hit the 618. See, again, the weakness coming in. And as soon as we get to 618, all the orders are already in and it starts to roll over. See here. All the way down. Now, where would the target be from here? And what you'd do is that you could look for an extension here. So we had the pullback. You saw the pullback come here, and it's exactly the same. So you're looking for the extension. So you'll see the pullback here. 618. So what you could say is, if you started selling or you started shorting Cardano at this point, you're going to look for a target, or you're going to look for where you could rebuy this. So an aim for me would be the 618. So you're looking at 884, but that's quite a way down. Probably 10% will do. It will be making a new low. So 10%, 272, 3.82 look good. So when you start going down too far, the 86, then you'd look at other previous and stuff like that. It'd be a bit too much for this. But it could do straight away. It could still go there. Still get there now. Don't forget, each candle's 4 hours, so it takes a lot of time. Right, it's not playing back. So we had the 618 sell off there. Caution, couldn't play back. Gone a bit wrong. Yeah, so it's continued to play back now. Now, if you were to measure here, that's probably a 618 of this move here. The buyers are coming back in. And then it rolls over. And it started to hold for a while on that accumulation point where you can see where they accumulated previously. So it's hit this 10%, and again they started to buy. Next time. And then we roll over again. We've hit now at the 618. So had buyers come in here. I mean, we went quite low there. We hit around $1. So you can look at the price as well. Now we're going back up. Now we could go potentially up as far as 618 again. The same thing could happen. But I think it'll go to the 50, come back down. So we've hit the 618 again. You could have hit this twice. They could short from here. And they do. And they roll it over again. Look how aggressive it was this time. Because it's done it already before. So why not? And they made a lot of money. Why not try and do it again? Yeah, now we've come down to the 27%. 38%. Then we bounce right up. Big hammer candle. Now we've got some shorts that will be trapped there. Now for them to get out of the position, they need to buy to close, so we could come back up. So if I leave the same fib on, now I could take a new measurement to that, but the other two come in. Let's just see what happens here if I leave it on. We've got an accumulation period going there. Longer period of accumulation. Axis getting a bit. So we're going to go off this point here. This is bringing us pretty close to what's going on now. So the reason I'm showing you this is that we had a sell-off when we hit this 618. Of this previous move down, which is on this one is the 886. So if we get above the 886, it's less likely that we're going to sell off and repeat the process again. Right, so we're almost at today's price now. I think that's it. That's as far as it goes. So where you'd probably see the weakness come in is here. But all the way along, it was going off the Fibonacci. That's why it's such a powerful tool. So you know that there is going to be weakness in these areas. One thing from the structure, and you know it also lines up with the Fibonacci. So what could happen here, like I said before, we come up, see weakness here, come down probably to as low as there, and then bounce and start heading in a bullish direction, which will take us pretty much, if I get the line here and I put the trend line back in, and you can see also using the break of the trend line, it all lines up to the Fibonacci as well, so you get the confluence of a lot of other things lining up. Now, I hope this was a bit of an insight to the Fibonacci, using the Fibs. Not so much me teaching you how to do it and what the levels are as such, but as you can see, there's a lot of learning material on YouTube and that show you how to use the Fibs. I'd go to Trading Wars. He's got brilliant videos and he explains the Fibs really well. All his videos are all related and you'll learn a lot of stuff by watching his videos. But as you can see, how useful the tool is on predicting the price, where you're going to put your sell orders, buy orders, what you're looking at as a plan, rather than looking at a chart and not actually knowing where it's going. Because at the end of the day, to a lot of people, just a load of scribbles. Just a tool as simple as that will build the picture up a lot better, so you know. Like, it works on every chart. So if I go to stock, for instance, I'm going to go to a daily here, a weekly, sorry. See what's going on here. So you look at DOT, we go up, we see the hammer, we go up. I know that that's 618. I've measured it anyway, and I know by looking at it with my eyes. I don't have to even use the Fibonacci tool. I can tell that that's a 618 straight away by looking at it. Sorry, I got it wrong. It's a 786, but I pretty much know that looking at that chart, that's an area that I'll be interested in. Now you can see where everyone else started buying at the 618 here. But then we break further down. And you see it, you can adjust your eyes to see, do you know what, that looks like a critical fib level. As you can see, we went down as far as the 886 there. Well, the majority of it was coming in at the 786. But you can see between both lines, that's where the buyers were coming in there. Rather than going, let's just remove this drawing there. Look at, oh, we're coming down, we're consolidating, but where do I buy? No one knows. Where's the floor? Where's the bounce? It's quite simply, you just get your tool, you measure, and let me rewind this. So you're looking at the tool and you're there thinking, well, all my friends are saying, oh, buy dot, it's going to the moon. It's gonna go. to this price, that price, and you're looking at it thinking, oh, is it a good time to buy? And it's like, no, it isn't. So, well, you think, so well, where would be a good price to buy? You can put this fib on, the high to the low to the high. And you think, well, I don't want to buy unless I get a pullback. Even if it's a 50%, you're still saving 37% of your money by buying down there. Let's get, well, I'm playing a bit tight. I like the area where they keep buying here. Well, you go to 618, you're saving 50%. And then if you think you want to play a bit tighter, you're saving 64%. The next level down, 72%. But yet you can say, well, how do you know it's definitely going to go today? It can go 20 each level. Well, you put a bit of money on the 618, a bit of money on the 786, and a bit of money there. So you dollar cost average down. So we look here. So we said to ourselves, right, we're going to buy at the 50 because everyone's going on. There's loads going on about Polkadot and all this. And I don't know, let's just say you put $1,000 on the 50% rather than putting $1,000 on now. It's still coming down. Now we hit this 50. Now you see buying's coming in. Now if you go to a smaller time frame, an hour or whatever, you could play that move. Because there'll be Fibonacci within the Fibonacci. Within the price. So the buyers start coming in at 50. You've bought $1,000 at that point. And now you're laughing because you're in profit. And soon enough, falls. But you put another $1,000 on at the 618. You can see how many more people come in then. See it with the pin, buying all the way up that candle. Eating up that candle. But if you put down at the 50, you're 10% down on your money as it stands at that point. See a hammer coming in there. Now, if you did buy 1,000 there and you bought 1,000 at the 618, you'd be running on break even here. It goes negative. The price breaks down even further. Don't know why it's doing that. Normally it should just bring me a candle up. It's doing all the movements within that week. Maybe it's the way I've got it. So you're now losing your money. You can see buyers are still coming in. Now, you'll be at break even, probably a little bit of profit there. And then they're selling again. I've not had it move like this. I don't know if it's something I've done there. It's actually not too bad. So then we see the price coming down. Let's just say you had another 1,000 at 786. You've invested 3,000, but you spread it. Rather than just sticking 3,000 or $300, you could do it out. It doesn't matter. It's still going to be the same percentage down. So even at this level, you bought up there, you'd have lost over half your money. So we continue on. Still, buyers are still coming around in this 618 area, so you feel a bit better. Then we just drop. Say another 1,000 gets activated there. You've got 3,000 on. You're taking a loss, but it's not as painful buying at these fib levels than it would be. You start buying where you just think, oh, do you know what? I'm just going to buy it because someone said it's going to do well. All the YouTubers are saying it's going to do well. It's always going to come back. No one's saying, oh, it's doing well when it's going down. So we come back down. Now you can see the buyers coming in at the fib levels every time they're coming in here. Because people don't know where it's going to go to. No one has a crystal ball to know that that's going to a certain price. You can predict, you can guess it will, and you can guess where the buyers are probably going to come in. This is slow. Now we went down to the 886. And then we get a bounce in price. So if you bought 1,000 there, you're going into profit now. On that candle, about 10%. So it breaks down your losses, spreading the cost down. So when it turns back, you're not in the negative. See, that's where we are now, up to date. So we're coming back. There's nothing saying that we don't go all the way down 1-to-1. But buying in these areas is the best thing you can do. You got an aim. You know where you are. Now, if this was you bought $1,000 down here, and then this shoots back to the 618, and you thought, do you know what? I want to de-risk here. I want a better cost average. You would have made enough profit there. Look. To now take the initial 1,000 off where you bought at the 0.5%. Now, you've made 38% on that 1,000. So you had 1,000 there, you made $380. And if you were losing your money because you bought at the 50, you were only losing 16% of your money once the price goes back up to the 618. So you've got quite a powerful buying window here. So you started buying in this whole area here. Now, that itself is how you should safely buy into it as it's coming down. I mean, it could go lower, but I don't think it will. I think we're gonna go up. The market's turning bullish, and I'll probably take a target on DOT. I'm not playing about with it or selling it unless I see a candle that tells me, do you know what? I'm going to take off and buy a bit cheaper. But I'm just going to go off the extension here. So if you bought at the 886 here and you're looking for targets at 618 at $63, you bought here, say it's 786. You're looking at 206% on your money, rather than when all your friends said, "Oh yeah, Polkadot's going to keep continuing going up," and you make. Sorry, I got the wrong tool there. You've waited. You're going to make 4%, 6%, and you've waited potentially 260 300 days to make 6%. This is why if you get trapped in, I mean, sometimes it can work. Sometimes you can buy. If someone turns around to you and says, oh yeah, you want to buy Polkadot, it's going to do really, really well and all this. And you accidentally, you didn't know what you were doing, you just bought, and you bought here and you just landed it, and people go, yeah, I made 200% of my money. And you think wherever you buy, you make money. You don't. So I'm sorry if this video is a bit boring and basic, but then there's people who probably don't know. I mean, people just enter crypto and buy the coin and they think the coin will go up. They don't really know what they're doing. I mean, I hope this was an insight. This isn't really a teaching video, but an insight to what tools you can use to start looking at the correct areas where to buy and where to take profit. I mean, I still have issues with taking profit now because I'm using such a long-term target, and when it comes back on me, I'm like, oh, but my targets are long-term. They're not short at the moment because I'm not watching it enough. But I'm playing a weak target. But you could buy, and you can do the same. It's repeated. You could do this on a 1 hour chart. So here, have a look. So this is a 1 hour chart. And let's say put a buy order in at the 618 and the 786. So we're looking at the hour chart. You can see that it's continuously repeated. So the price pulls back to 786. So let's just say you got $1,000, just easier to work out, regardless of what you put on. Let's just say you put 1,000 on there. You buy £1,000 worth of dot there on the 618, and you buy on the 786. Price goes up, and you're making 3% on 1,000. Making 5% on another 1,000. Then the price drops, and you're thinking, well, why did the price just suddenly drop there? Now we came into the prior resistance as well, so that could bring weakness, but we break through. And look what's happened. You started going into profit, then the price just collapsed. So you were taking losses here on your money. But look how quickly it's pulled back in this area. Where how long you'd pull back if you bought up here. It's not there yet. But you bought in these areas, we're back above 618 now. So you're back in profit, a profit where you were on the 786 and the 618. You're back in profit. Now, what caused that to sell off there? This would have been the fib, but the opposing leg. So the opposing leg here. You take the fib, but this time you're going from the high to the low. And look here, 618. The opposing leg, 618. We get an inverted hammer. That's your signal. Probably sell on that hour. And let's just say you got out around about there. So you sell your position. That's if you can get out. You need to be on a exchange with good liquidity. And so you sell. And you put a buy order on this move here. You take the low to the high, I know this might look confusing with all the lines and everywhere, but your eyes will adjust. Your eyes will adjust to this. Takes a while, but start doing it the other way. Just do it one at a time, and you can write down the price next to it if you can't work within all these lines on here. So we're taking this low here to the high. Now we get this sell-off at the 618 of the previous move. And then you put a buy order in, let's just say at the 618. And then 786, you're laughing. And you could have hit all the fib levels down here. But at one point you'd be losing, you think, oh, why did I do that? The price will continue down. No, it won't. It'll always come back on itself. Especially when you see that kind of thing come in. Let's just say you wanted to wait for candle confirmation. You see the hammer come in, then you just start buying here on the start of this candle. And then, as you can see, everyone's seen this hammer coming in, but we're going all the way up. And you can keep doing opposing legs, and it gives you a guide. And it's how the allocated robots look at. You can program a bot to keep taking these Fibonacci moves all day, all night long, 368 days a year in the crypto market. 364 days a year, sorry, in the crypto market. And they'll be lined up on the 618, 38, 786. You don't know which one it's going to hit, but you can see the power where it comes in. Like here, the opposing leg on this 1 hour of that move. $618, the selling comes on. 786 is selling all the way around here to probably try and go down and so you got the bulls and bears constantly at each other. So price comes down. Bounces up. 618, people start selling because what they're trying to do is send this back down. Let's just say to the 10% now. And then you look here, where we're all lined up before. And this move is in an hour chart. This is within a day. Oh, more than a day. This is within a week, for instance. If I measured this time frame from this move here to there, was a move lasting 5 days. Yeah, so within a week, all this has happened. And look how many fibs pulled off in a week. You could have sat there doing that all the time. So there is massive movement where you can play these fibs within a week chart. So all this happened. I'll go to the week here. All them moves where you could have got all them fibs all happened within this one candle here. All happened with there, and you saw how many fibs played out there in 5 days. Things take time. Obviously, the lower time frame you go, the faster it will take place. So if I go here now to the 1 hour. It's taking time to load up. Here we go. We get the high there. High wave candle, meaning high volatility. It sells off. So if you were playing the short on this, so you see the high wave there. Did you know what? I missed it. We'll see where it comes down. You just load back up, ready to do it again. At the 618, boom, and you can see price went bouncing along here, hits the 618, bang down. And then we know that there was buyers coming in there. They would have took the set their take profits there. They would have seen that and gone, do you know what? I'm going to take profits around the 27%. There's a lot of buying coming in there. So I hope this was an insight. I'm not going to go on anymore because I hope if you take anything away from the video, and if you would like to see more of this, and I'll try and explain it a little bit more simpler another time. As far as the markets go in, look at this daily. I'm only going to go through Cardano now. So we get the high wave come in. We've had an inside bar and an outside bar, so it's broke the previous day's high and low there. It's given us the trading walls Nirvana pattern. Means it's high volatility. It could give a break to the upside or the downside, but I believe we come up above this 20 EMA. There didn't seem to be a lot of selling and resistance here. We break through, gone sideways actually, and I can actually see us making this, I think, to at least the 618. And then we'll go up here and then we'll see what happens here. That's me just looking at the daily chart. Right, thank you for watching. If you like this, please like and subscribe. Thank you very much.